The moment you've been waiting for is finally here. If you've been checking your bank account hoping for some financial relief, I have news that's going to make your day a whole lot better. Stimulus payments are officially rolling out starting in March, and yes, you might be one of the millions of Americans who's about to see money land directly in your account. But here's the thing that nobody's talking about. Not everyone is going to get the same amount, and there are specific criteria you need to meet to qualify. So if you're wondering whether you're eligible, how much you could receive, and most importantly, when that money is actually going to hit your account, you need to stay with me because what I'm about to share could literally change your financial situation this spring. Listen, I know we've all been through a lot over the past few years, and the last thing any of us wants is to miss out on money that we're entitled to. That's exactly why I'm breaking down everything you need to know about these March stimulus payments in a way that actually makes sense. No confusing government jargon, no misleading information, just the straight facts that will help you understand if you qualify and what steps you need to take right now to make sure you don't leave a single dollar on the table. So let's dive right into this because time is of the essence. The first question on everyone's mind is obviously who's eligible for these payments. Now, this isn't a blanket stimulus like we saw during the height of the pandemic where nearly everyone received checks. These March payments are more targeted, which means you need to meet specific requirements to qualify. The good news is that millions of Americans will still be eligible, and you might be one of them even if you think you're not. The primary eligibility criteria revolves around your income level from your most recent tax return. If you filed your taxes for the previous year, the government is going to look at your adjusted gross income to determine whether you qualify. For single filers, the threshold is set at individuals who earned less than $75,000 in adjusted gross income. If you're married and filing jointly, that threshold jumps up to $150,000. And for those of you who file as head of household, you're looking at a threshold of $112,500. Now, here's where it gets interesting and where a lot of people get confused. These aren't hard cutoffs where you suddenly become completely ineligible if you earn $1 over the limit. The payment amounts actually phase out gradually as your income increases. So even if you're slightly above these base thresholds, you might still qualify for a partial payment. The phase out continues until you reach the upper income limits, which are $99,000 for single filers, $198,000 for married couples filing jointly, and approximately $124,500 for head of household filers. But income isn't the only factor that determines eligibility. You also need to have a valid Social Security number, and you must be a United States citizen or resident alien. If you can be claimed as a dependent on someone else's tax return, unfortunately, you won't qualify for your own payment. However, and this is crucial for parents and guardians out there, if you have dependents, you could receive additional money for each qualifying child or dependent in your household. The dependent situation is actually one of the most significant aspects of these stimulus payments that people overlook. For each qualifying dependent under the age of 17, eligible households can receive an additional payment. This means that families with children could see substantially larger payments than individuals without dependents. The additional amount per child varies, but we're looking at figures that could add several $100s per dependent to your total payment. So if you're a family of 4 with 2 qualifying children and you meet the income requirements, your total payment could be significantly higher than someone who's single with no dependents. Now let's talk about the actual dollar amounts, because I know that's what you really want to know. How much are we talking about here? For individuals who qualify for the full payment, the base amount is set at around $1,200. For married couples filing jointly, you're looking at approximately $2,400. These are the maximum amounts for those who fall well within the income thresholds I mentioned earlier. But remember those dependents we talked about? For each qualifying child, you can add roughly $500 to your total. So let's do some quick math here. If you're a married couple with 2 children and your household income is below the threshold, you could be looking at a total payment of $3,400. That's $2,400 for the couple plus $500 for each of the 2 children. For many families, that's a substantial amount of money that could help with everything from catching up on bills to building an emergency fund or covering unexpected expenses that always seem to pop up at the worst possible times. It's important to understand that these amounts can vary slightly based on several factors, and the phase-out calculation can get a bit complex. As your income approaches and exceeds the base threshold, the amount you receive decreases incrementally. The reduction rate is typically calculated as a percentage of the amount by which your income exceeds the threshold. Without getting too deep into the mathematical weeds, just know that if you're close to the income limits, you'll likely receive something, but it will be less than the maximum amount. So, when exactly are these payments going to start rolling out? This is where the March timeline comes into play, and it's critical that you understand the schedule. The rollout is happening in phases, which means not everyone is going to receive their payment on the exact same day. The government learned from previous stimulus distributions that a phased approach helps prevent system overloads and ensures that payments are processed more accurately. The first wave of payments is scheduled to begin in early March, specifically targeting those who have direct deposit information already on file with the Internal Revenue Service. If you received previous stimulus payments via direct deposit, or if you receive your tax refunds through direct deposit, you're likely to be in this first group. These payments could start appearing in accounts as early as the first week of March, and you could wake up one morning to find that money already waiting for you. The second wave will focus on those who receive paper checks. This wave typically begins about 1 to 2 weeks after the initial direct deposit wave. So if you're expecting a paper check, you're probably looking at payments being mailed out in mid to late March. Keep in mind that paper checks take additional time to arrive through the Postal Service, so even if your check is mailed in mid-March, you might not actually receive it until late March or even early April, depending on where you live. There's also a third category that many people don't realize exists, and that's for those who will receive prepaid debit cards. Some recipients will get their stimulus payment loaded onto an economic impact payment card, which is essentially a prepaid Visa debit card. These cards offer a convenient way to access your funds if you don't have a bank account or if the IRS doesn't have your direct deposit information. The debit card wave typically falls somewhere between the direct deposit and paper check timelines. Here's something really important that you need to pay attention to right now. If you want to ensure you get your payment as quickly as possible, you need to make absolutely certain that the IRS has your current and accurate information. This means verifying that they have your correct address, your direct deposit information if you have it, and any changes to your dependent status. The best way to do this is to file your most recent tax return as soon as possible if you haven't already done so. I cannot stress this enough. Filing your taxes early is one of the single most important things you can do to expedite your stimulus payment. The IRS uses your most recent tax return to determine eligibility and calculate your payment amount. If you haven't filed yet, you need to make that a priority. And if your financial situation has changed significantly since your last tax return, such as a decrease in income or an increase in dependents, filing your current return could actually make you eligible for a larger payment or qualify you when you might not have been eligible based on older information. Now, what if you didn't receive previous stimulus payments even though you were eligible? This is actually more common than you might think, and there's a remedy for this situation. If you were eligible for previous payments but never received them, you can claim what's called the Recovery Rebate Credit when you file your tax return. This allows you to receive the money you were entitled to as part of your tax refund. It's not too late to claim these credits from earlier stimulus programs, so if you're in this situation, make sure you're working with a tax professional or using tax software that helps you identify and claim any credits you're eligible for. Let's address some common situations and questions that come up regarding these payments because knowledge is power when it comes to getting the money you deserve. First, what if you owe back taxes? Can you still receive a stimulus payment? The good news is that yes, in most cases, your stimulus payment will not be reduced or withheld if you owe federal taxes. The IRS has stated that these payments are designed to provide economic relief and won't be offset by outstanding federal tax debt. However, there are some exceptions to this rule, particularly when it comes to past due child support. If you owe child support arrears, your payment may be garnished to satisfy those obligations. What about Social Security recipients and those receiving disability benefits? This is a question I get constantly, and the answer is yes. You can absolutely still qualify for these stimulus payments, even if your only income is from Social Security, SSI, SSDI, or veterans benefits. You don't need to file a tax return to receive the payment if you're in this category. The government will use the information they already have on file from the Social Security Administration to process your payment automatically. However, if you have dependents that aren't reflected in the Social Security Administration's records, you may need to file a simple tax return to ensure you receive the additional dependent payments. For college students and young adults, the dependent question becomes really important. If you're over 18 but can still be claimed as a dependent on your parents' tax return, you won't receive your own stimulus payment, but your parents may receive additional money for claiming you as a dependent if you meet certain criteria. This is why it's so important for families to communicate about tax filing status and ensure they're maximizing their benefits. I also want to talk about what you should do if you don't receive a payment that you believe you're entitled to. First, don't panic. The rollout takes time, and just because you don't see money in your account on day one doesn't mean you're not going to get it. Give the process a few weeks to work through the system. However, if several weeks have passed and you still haven't received anything, you'll want to use the IRS online tools to check the status of your payment. The IRS typically provides a tracking portal where you can input your information and see where your payment stands in the process. If the tracking tool shows that a payment was issued but you never received it, that's when you need to take action. For direct deposits that never appeared, you'll need to initiate a payment trace with the IRS. For paper checks or debit cards that never arrived, you'll also need to request a trace. These processes can take time, but they're important steps to ensure you eventually receive the funds you're entitled to. Something else that's really important to understand is what you should do with this money once you receive it. I know that might sound like a strange thing to include in a video about stimulus payments, but hear me out. While it's incredibly tempting to treat this like found money and immediately spend it on things you want, approaching this payment strategically could have a much bigger impact on your financial health. If you're behind on essential bills like rent, mortgage, utilities, or car payments, catching up on those should be your first priority. The stress relief alone from getting current on critical expenses is worth more than any purchase you could make. If you're current on your essential bills, consider building or strengthening your emergency fund. Financial experts recommend having 3 to 6 months of expenses saved, and even if this stimulus payment only gets you partway there, it's a solid start that could prevent you from going into debt when unexpected expenses arise. For those who are fortunate enough to be in a stable financial position, this could be an opportunity to pay down high-interest debt like credit cards, invest in your future through retirement accounts, or even invest in education or skills training that could increase your earning potential. The key is being intentional about how you use this money rather than letting it just disappear into general spending. As we get closer to these payments actually rolling out, you're going to see a lot of information and, unfortunately, a lot of misinformation circulating online and through social media. I want to arm you with the ability to distinguish between legitimate information and scams. The IRS will never call you, text you, or email you asking for personal information in order to process your stimulus payment. They will never ask for your bank account information, social security number, or any form of payment to expedite your stimulus check. If you receive any communication claiming to be from the IRS asking for this type of information, it is a scam. Delete it, hang up or throw it away, and report it to the appropriate authorities. The only legitimate way to interact with the IRS about your stimulus payment is through their official website or by calling their official phone numbers, which you can find on the irs.gov website. Don't click on links in emails or texts claiming to help you check your stimulus status. Always go directly to the official IRS website by typing the address into your browser yourself. For those of you who are self-employed or had irregular income over the past year, your situation might be a bit more complex. If your income fluctuated significantly, you might find that you're eligible based on one year's tax return, but not another. This is why filing your most recent tax return is so important. The IRS will generally use the most recent information available to them, so if your current year income is lower than the previous year, filing that return could qualify you for a payment you might not otherwise receive. I also want to address what happens if you've moved recently or are experiencing housing instability. If the IRS has an old address on file, your paper check could be sent to the wrong location. This is another huge reason why updating your information with the IRS is critical. If you've moved, file a change of address with both the post office and update your address with the IRS through your tax return or by contacting them directly. For those experiencing homelessness or housing instability, there are resources available through various social service agencies that can help you receive and access your payment even without a permanent address. The bottom line is this: these March stimulus payments represent real money that could make a real difference in your life, but only if you take the right steps to ensure you receive what you're entitled to. Don't assume that the government is just going to automatically figure everything out and send you money. While many payments will be automatic for those whose information is current and accurate, taking proactive steps to verify your eligibility, update your information, and file your taxes can mean the difference between receiving your payment quickly or facing delays and complications. As we wrap this up, I want you to walk away with a clear action plan. First, if you haven't filed your most recent tax return, make that your top priority. Second, verify that the IRS has your current address and direct deposit information if applicable. Third, check your eligibility based on the income thresholds and dependent information I shared with you. Fourth, mark your calendar for early March and start monitoring for your payment. And fifth, have a plan for how you're going to use this money strategically to improve your financial situation. Remember, this isn't just about getting a check from the government. This is about taking control of your financial future and using every resource available to you to build stability and security for yourself and your family. These payments are designed to provide relief and support during challenging economic times, and you absolutely deserve to receive every dollar you're entitled to. Don't let confusion, misinformation, or inaction prevent you from accessing this money. Stay informed, stay proactive, and most importantly, make sure you're taking the necessary steps right now to position yourself to receive your payment as quickly as possible. If this information helped you understand the stimulus payment situation better, I'd really appreciate it if you'd share this video with friends and family who might also benefit from knowing these details, and make sure you're subscribed so you don't miss any updates as we get closer to these payments actually rolling out, because I'll be keeping you informed every step of the way with any new information or changes that develop.